Hello and welcome to the review of what happened with the Australian employment change. The This was the trade plan which was sent well in advance, which basically said that we are expecting no job growth and we expecting it to be absolutely flat, and I trade a plus or minus 20k from expected. The spike direction actual greater than forecast is equal to uh, good for the currency. So if we have 20,000 uh, more jobs than expected, then I'd be buying the Aussie US dollar. Let's see if that's actually what happened. At 21:30 when we got the news was 38.9, which was much better than expected, almost doubling our triggers. And let's see what happened. From the pre-release price of, I'd say, about 0.9892, the market spiked right up to 0.9954. So close to about 60 pips of a spike. Not quite, but close to that. And it was one way, did not have any whipsaw. So if we could get into the price action at maybe 10, 20, 30 pip slippage, maybe you'd have gotten at a 0.9925-ish area, you'd yet be able to make some amount of pips. And now I said that once the spike trade is over, I'll like to read the news and suggest the trades after that. So I actually read the news, and there were a few key points. Now, the employment increased to 11517. So 11,517,000 is what the employment increased to, and the unemployment decreased to um, about 615,000 is what the unemployment decrease. So we have employment going up and the unemployment number coming down, and the unemployment rate being steady at 5.1%, and the participation rate, that means people who participate in the survey, increased, or in this case was steady at 6.3. So that's also good. That means that there are more people taking part in the survey. So this survey has is built on solid ground. And all in all, the most important factor was that the part-time employment decrease. So the job numbers were based on solid growth, and that's what I like. And since they were based on solid growth, I sent buy Aussie US dollar from 0.9941 ish area with a 45 pip stop and a 55 pip target. So let's see what happens. So let us mark our potential entry. Okay, and uh, this would be our entry, and a 55 pip would make it to about 0.9996 ish area. So let us mark our potential exit. Change the color to green, and we then also mark our potential stop loss. So if we have an entry from 9941, I guess our stop loss would be around here. 0. About 0.9895-ish area is what our stop loss would have been. So let's see what transpired after that. Um, we are not yet in. We're not yet in, and the market just moving around, not doing much. So I like to get in from a good support area, but I I would have normally wanted a bigger retracement, but since these numbers were so stellar, I was even willing to take the 0.9941 price. And finally, we get into our trade right here. So this is our trade entry, and now we are long. And let's see what happens after that. Uh, Nothing much, nothing much. Yes, we've in few pips of floating profit, nothing much. And the market is kind of asleep right now. So let me just tighten it. And the market starts going in our direction. Note the time, it's about 1 hour before European Open. So during the Japanese session, the market was actually sleeping, but then close enough to the European Open, the market starts moving into our direction, and it did make one attempt to go up, but it failed that. It came down, and like how it suggested that I like to go up along from a support area. So let's draw what would have been good support areas using the Fibonacci retracement, and a good support area would have been 0.9921. That's what I ideally would like to go long from, but since this report was really good, I didn't mind taking the 0.9941 trade, and let's see what actually happened. So the market's not doing much again. Let me tighten it a little bit, and the market went down, reach at least what would have been our normal entry price if the numbers were not all that stellar. But we have a stop loss well below the 0.9908 level, which would have been another support area. So, though ideally I would like to keep my stop loss at the 6.2-ish area, because that was the pre-release price, but or this low out here, but the risk reward is not cutting it. So I decide to maybe bail out if in case the market comes to 0.9896. So the market's going against us for a little while, and then at 7 o'clock, this was the news from UK, which helped us, and which got the Aussie US dollar to move right up. So, though we were helped with the the UK news, but that's the kind of uh, integration we see in the market sometimes. We cannot factor in everything, but in this case, the news turned out to be in the favor of our initial trade, and the market goes up, and we were able to hit our target. Now, if you can see, I placed a 55 pip target. Now, the 55 pip target was placed strategically because of the parity. I did not want to target much higher than parity, and that's why I targeted 55 pips, which was 10 pips higher than my stop loss, and that's using which I could reach my target parameter. So, a few lessons to be learned out here. The lesson number one is that you always need to know where your stop loss and your take profit is, and sometimes your if your take profit uh, is beyond what might be possible, like in this case, a 1.0 take profit or beyond that, uh, one needs to maybe change the risk reward criteria so that the take profit levels are in line with what one can expect from the market. So I hope you all enjoyed this video, and let me know if you like reviews like this so that it can help you understand and trade better. Thank you.